Hey guys, Akil Stokes here. Welcome back to another Weekend Trading Edge video. If you guys are brand new to the channel, welcome. This is a video that I put out each and every weekend, sharing with you the top trading ideas that are on my radar for the week to come. We're gonna hop straight into it this week, meaning the technicals, but if you're curious about why we saw so much strength in the dollar, please refer to my previous video titled, I don't know, the Fed had a problem or whatever it's called. And if I have time and energy, I'll do another kind of fundamental weekend update, weekend review type of deal like I did last week, since you guys really seem to like that. Now, let's hop in. We are going to start with the most popular pair in the Forex market, the euro dollar. And although the euro dollar and myself are in bad terms because of a losing trade that I had to end the week, I'm going to push that to the side and analyze it for you guys because we have a few good trading opportunities setting up. So the first thing we have is this. If we take a little bit of a recap on what price has done. Price has rallied down, right? We've put in a nice little wedge pattern here, and then we broke out to the upside. We were traced back down, we failed to extend up, and then we ended our week with a break and close below our previous level of structure support. Now, if you guys are new to the channel, I follow a 4-step repetitive process that you will be sick and tired with if you watch any more than 5 of my videos in a row, called IPDE. Identify, predict, decide, execute. And when I identify a break and close below a previous level of structure, an important previous level of structure, I should say, that allows me to make the prediction that price is likely to go lower. Now, that prediction process is a multiple part process. I'm not just predicting the direction of what I think price is likely to go, but I'm also predicting the location, and that's where this one gets a little bit tricky. Although I'm predicting a move lower, you can see said move lower or said price action comes right into a previous level of consolidation. And the question is, well, how do I know, or I should have said this, I missed a great opportunity. How low can you go, to quote the great Ludacris? So in the past, I would just be very conservative and just take targets at the highs and be like, we already came down to test structure. I can't take the trade, look for another opportunity. But over the last few years, I've implemented something to my trading, which is the volume profile tool, which just gives me a little bit of clarity, a little bit more clarity about where inside said zone price is more likely to go to. So if I take my anchored volume profile tool, which is up here, and there's also a full video demonstrating where to find it, how to use it, the settings and all that stuff if you're new to it and you like it. So I'll link that in the video below or share the thumbnail at the end. You're probably better off waiting for the end because I tend to forget to link things. But if I take that tool and I drag it out from our most recent range, you're going to see that we do have a little bit of a volume spike right here, but an even bigger volume spike right here. This is pretty much right at the 50% level of our previous wedge pattern. Now, I want you to keep that in the back of your mind because we're going to add on to that as well. No, how do I want to do this? No, let's, let's keep it in the back of your mind. I want to add on to that. So another thing that we're looking for here, and some of you guys are probably shouting this already, is, man, Akil, we have a bat pattern, we have a bat pattern, we have a bat pattern. And no, you're not wrong. We do have a bat pattern. Did I trick you there? I hope so. If I look at this move as being my X to A, this swing low to swing high, and I measure my Fibonacci retracement from that swing low to that swing high, you're going to see that this first retracement, the previous level of structure that we created, came to our 50% Fibonacci retracement and then bounced off. So this is what puts me on alert for a bat pattern. And a bat pattern completes down at our 886, so right around here. So in X to A, swing low to swing high. In A to B, our first retracement. B to C is this failed extension. And then a CD completion would complete right down here at that 886. And if you look to the right, you're going to notice that that 886, the completion point for our bat pattern, comes exactly at the high level of volume that we spotted before, making this a pretty good sign that if we are going to make a prediction of where price is likely to go lower to, this is a darn good level to predict. Now, for the bat pattern, this is a buying opportunity. So what you would look to do here is to buy it up, something like that. But you can also use that bat pattern completion and that overall predictive level to set up targets for any type of bearish trade. So meaning that you're looking to get involved and trade down to here. And of course, you can do that infamous stop and reverse, where if you end up getting short, you can take targets at the bat and then directly get long the bat and get involved that way and hopefully get 2 back-to-back trades. I know it seems crazy, but we've actually had a good amount of them complete both ways this year so far. So might not be as crazy as you think. So just heading down to the lower time frame real quick, the 4 hour, right? If we're looking to get short, what I typically look for, and by typically I mean all the time, is I look for a pullback. So I would look for price action to pull back into our previous level of structure support, which will now act as resistance, and then look for a continuation back down to that zone. So cool opportunities here on the euro dollar, really cool confluence, whether you're on the bullish side or the bearish side. And that's a great way to kick off this vid. Next up is going to be the pound yen. And we've seen interesting movement on the yen pairs, right? You guys should know about the whole Bank of Japan stuff and the intervention and kind of the plays that we've been looking at on our yen pairs for the last few weeks or so. And what's interesting is that as we get more away from the intervention, we've seen the different yen pairs play out a little differently. Just kind of bounce around real quick, or let's do this. Let's do a try screen here. If we take a look at, this is going to be pound yen over here on my far left. And then let's make this euro yen here in the middle. What do I want to do? Daily chart here. There we go. Sorry about that. Daily chart here, and then let's go, let's kind of make this similar. Let's make this dollar yen, which is going to be the most different out of the 3. Dollar yen, you can see that although we started with very, very similar looks for what these yen pairs were doing, as far as like the initial spikes down, here we go, like that, they've actually put in kind of 3 different stories, right? The dollar yen has seen the dollar strength and we're pushing back up as we thought we were going to do with all 3 pairs. The euro yen is kind of in the middle, right? This is a whole Goldilocks situation. One is super bullish, one is neutral in the middle. And then the pound yen is kind of diving back down. And this just goes to show you, I'm not going to get into a rant about correlations because you guys know how I feel about that. And it'll end up being an hour later before we get back into the analysis. But this is why it's important to do your analysis on each individual pair, because although the yen is involved in all 3 of these crosses, they're playing different matches. They're fighting different battles. One is the yen versus the Great British Pound. The other one is the yen versus the euro. The other one is the yen versus the US dollar. And they all have different unique situations happening with all of them. So this is why it's important to only trade based off of what you see on your individual chart and not based off of information from another chart that has nothing to do with your individual chart. So back to good old Poundy, the beast. What we have here is this. So these spikes, these legs down here, this is what we've been calling, and I'm going to make this name up right now, which I guess technically means we haven't been calling it. This has been our intervention rejection zone, meaning that as the Bank of the yen has been intervened with, right? Don't want to put anything out there. We've seen traders fight back at these zones. How do we know this? We have these long wicks, right? Intervention down, traders beat it back up. We try to go down, traders beat it back up, traders beat it back up. More intervention, traders beat it back up. Each time we've come down to this level, it has been beaten back up. Now, there's still no fundamental reason that the yen should not be weak. So there's no reason that I see traders would all of a sudden change their mind and say, hey, yeah, we're going to see a strong yen. So it would not surprise me to see this thing get beat back up once again. Now, Of course, I think it's a very dumb idea to just enter this on the open and buy it. You want to wait for your reason for entry. So make sure you have that. But you've got price action in a rejection zone. You've got the RSI massively oversold. You've got, if you were to put Bollinger Bands or Keltner channels on here, you probably have volatility bands, trading outside of it. This is a good level to keep an eye on because you know that it's been important in the past. And until proven otherwise, we should look at it as being important in the future. So no technical reason to get involved now, but just something you should keep your eye on. Another pair you should keep your eye on is going to be the Aussie dollar. You can look at this one a few ways as well. I know a few traders may be seeing this as a bat pattern in its own right. Looking at, where's my daily here? X to A, swing low to swing high, A to B right here, B to C up there, C to D down here right at our 886. So it's an at market bat. If you don't see it as a bat, it's also a brilliant looking structured trade, right? If I just measure this zone out, right, the zone of our bat pattern completion, 886 to our X leg, and now move it to the left, right, it comes right at this previous rejection zone that we had right here. RSI is also massively oversold. I might have said overbought on the last pair. I meant to say oversold, but you guys get what I'm saying. Massively oversold here. Once again, something that you would need is you would need a reason for entry. You would need proof that, you would need the market to show you proof that your prediction is more likely to be right versus wrong. But this is at an extremely good level. Let me just see real quick on the hourly. Hourly doesn't really tell us anything good. So another one where it's, if it's a bat, if you have this as a bat pattern, take it right away because you're getting a cheaper entry on it right now. But if you don't have it as a bat pattern, certainly a nice looking structured trade. And if we can push up from here, I would fully expect us to retest back up to our B leg. We have anything around here? B leg or a little bit lower. Yeah, no, right in the middle of our B leg at the 72-cent even handle. That's a pretty decent level to shoot for. Euro Aussie. Now, hopefully you guys saw the range bar video that I put out the other day talking about the ascending triangle that we traded here on the Euro Aussie. If you haven't done that, put it on your to watch list. It's a great technical video and explains a little bit about the pros and cons of range bars as well. But that push up is setting us up for a potential head and shoulders pattern. Now, we're still early in, so I won't spend too much time on this, but here's what it looks like. Our first move down right here is going to be our left shoulder. Our bounce back up is going to be our left neck. Our extension down is going to be our head. And this most recent extension up, or failed extension, I should say, retracement up, is going to be our right neck. So what we need now for the completion of our head and shoulders is another retracement, ideally to a symmetrical level of our as our left shoulder. And then we need price action to break and close above the neckline. Now, if this right neckline stays as is, you have two choices. You can have a slanted neckline, it's like a traditional trend line connecting the dots, and you would need a violation of said trend line in order to validate your head and shoulders pattern. Or if you're someone that uses horizontal support and resistance, you want to take the high of this right here, and then you would need a break and close above that high in order to validate your head and shoulders pattern. So really early on in the process, but a head and shoulders pattern is a classic reversal pattern. If you look at Euro Aussie bigger picture, we came down, we violated this most recent level of structure, but we did run into other levels of structure down here, these previous lows. So it's not a bad location to expect a little bit of a reversal, to be honest with you. Pound Aussie is in a very similar situation. We can look at this from both the hourly or the 4 hour. We'll go to the hourly just to make it crystal clear for you. But we have price action coming down, left shoulder, move back up, left neck, extension down, our head, move back up, retracement, giving us our right shoulder. And then you can see, right, so far, or at least as of right now, we have a symmetrical right shoulder. And once again, we would need a violation of this slanted trend line or this horizontal level of support and resistance in order to validate our pattern. Now, if we do push up, and this is going to be more easily, you can see it better on the 4 hour. I do think we'll push up into this most recent level of consolidation, this zone right here. Looking at about 187.5. So 187.50s is I think a good level to predict where we're going to go to. And again, part of that prediction comes from just the ability to analyze structure and key levels within that structure. But I would bet that we would also have maybe the volume spike there as well. We'll probably have one, let's see how good I am. One at 187, what did I say, 187.50s, so right about here, and then probably a bigger one right here in the middle at about 188 even, that other psychological number. So this is a fun game I like to play. It doesn't serve any purpose. It's just, you know, you're doing a lot of charting stuff. You might as well have fun and play the prediction game. Come on, baby, if it's wrong, I'll edit this out and never show it to you. Yeah, okay. Well, not so much on the first one, but the second one, I get credit for the second one. It's a little above it, but it's in the area. It's actually a little bit of a void exactly where I drew the line, which is the market just playing games with me, but close enough, close enough. So anyway, I would think that we'd see a move into this level right here. I'm going to still count it as a win. Euro New Zealand, another big boomer to end the week. And I know what you're thinking, Akil, this looks like an absolutely beautiful pattern of the bat, but it is not, right? We have rules. If we take our X to A, swing high to swing low, you see that we're just going to miss our 50% retracement. Maybe you can sneak it down and start a little bit here, right, at this lower X, but you're still going to miss it. Obviously, check your data. So not going to be a bat pattern. We can't finagle it and make it into one. However, what we do have is we have two things. We have price coming to a previous level of structure. I think we can all agree, right in this area. We have a very high momentum move, right, plural, right? We have what, one green and then 2, 3, 4, 5, 6, 7 bullish candles in a row. If we look at my RSI, we can see that our RSI has gone massively overbought, right? Overbought on your traditional indicator is going to be 70. Overbought on my settings is going to be 80. We have come to about 84, so massively overbought. And we have signs of loss of momentum, meaning that you can see that these are going to be considered 3 strong bullish candles. The ranges are wide, meaning they're long candlesticks, and the closes are at the very highs, meaning that the bears or the sellers weren't able to push them off the highs that much. And then we have smaller range candles. We have this skinny little fella right here that's called a doji. That's a sign of indecision. We have a less skinnier fella. This one ate a little bit more, has a slightly bigger body, but still stick figure arms and legs to the top and the bottom, which is another doji of indecision. And then we ended the week with the skinniest of the skinniest candles, another doji. So we've got 3 candles in a row showing us indecision. The slope has gotten less steep. It has decreased. These are all signs of loss of momentum as we're coming up into our level of structure. So something that you would want to look for here, again, is a sign of reversal, and probably the easiest sign you can look for is a lower low, lower close candle. And if we do get that, the place that I would expect us to go down to is to retest this midpoint right here. A little bit higher than that, that's 197.96. Let's go to this even handle 198 flat. Pretty decent level. Looks like a 50% retracement as well. I was close on the last prediction. You gotta give me one, gotta give me one. Yeah, that's close enough. Right? Yeah, that counts. Now also flipping to the hourly, if you want more clues, right? We talked about this loss of momentum, right? We can see price action literally exploding like a rocket. Boom, 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 straight up, and then kind of like veering off. This is probably the perfect example I can give you. Whenever I talk about loss of momentum, I use the analogy of like throwing a baseball in the air, and then when it leaves your hand, like it goes up with a lot of force in a very steep angle, and then eventually it gets to the top, its apex, and it starts to curve back down. This is exactly this. If this were a rocket ship, I thought I had a rocket ship on display here. Come on, baby. There we go. If this were a rocket ship and it was booming, 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 booming out of space, this would be the point where it ran out of fuel and it just started to kind of drift and slow down. So we have this less steep upward movement. If we look at our RSI once again, right, another way to use it other than just the massive overboughtness that we've had up at 94 here in the hourly, we can start to see that as prices continually, as prices making higher highs still, right? We're starting to see lower highs on our RSI. This is called bearish divergence, which is a good sign of a reversal. Not only do we kind of break out of this rising channel with this lower low, lower close right here, but as we come back to test it, we do with a nice rejection candle. Once again, if we were to get a lower low, lower close candle beneath this, that would be a pretty decent sign for a bearish trading opportunity. And the risk reward would be amazing. If we just were to look at this from a risk standpoint, just I'm not gonna do any math, I'll just draw it on kind of quickly here. If we're just to kind of sell it right there, let's get stops even above the previous highs. I don't even think you need to be this high to be honest with you, but you could be. And you're trading it all the way back down to that 198 even handle. This is going to be about a 1.35 risk reward. If we did it kind of more aggressively, let's see, we're looking at about 199.14, so 34s, 32s would be our stop loss. You're looking at something even better looking at that, 2 to 1. Mwah! Magnificent. All right, back on our head and shoulders theme, we actually have a completed one for you. This is going to be on the Canada Swiss 4 hour. We've got, again, movement down, movement up, extension down, movement back up, failed extension down, and you can see we violate our neckline, whether slanted or horizontal. So this is what a head and shoulders completion looks like. Now, the next question that we need to ask ourselves is, okay, if price action is likely to go higher because of the head and shoulders completion, the violation of structure, the higher high, higher close, it all kind of runs together, where are we likely to go higher to? And once again, we've got a zone of here to here, which looks promising. And we want to ask ourselves, where inside that zone are we likely to go to? And there are a few things that we can do here, right? A few tactics. One, we can take an AB equals CD pattern. So a move from the low to the high right there, copy and paste it, drag it on. An equal measured move would put us right here at about, what is this, 57.43. We can complement that with a Fibonacci extension from that same swing low to swing high, the head to the right neck and back down. See if we get any confluence. Not too much. We got a 618 a little bit higher, so we're starting to create a little bit of a zone right there. We can take a Fibonacci retracement as well from, we can do two places. We can take it from this ginormous swing high to swing low, the bigger picture, the macro swing high to swing low, and you can see we're going to get a 618 Fibonacci retracement right in that zone. Ding. And then let's just drag one. Let's see from, if we take it from this smaller move right here, we got a 786 there as well. So you can see we've got a lot of Fibonacci confluence right in that zone, making that a pretty decent place to look for. And of course, we can top that off with some volume and cross our fingers to see if the volume cooperates with us. And ha ha ha, look at that, we do. So again, for you guys that are new on volume, make sure you watch the video. But to break it down very simply, the things that I look for is this. High levels of volume. If we were to make a drinking game out of me stumbling over my words today, you guys would be drunk and you'd have to pause the video and come back and watch it tomorrow because it wouldn't make sense because of how drunk you are because I keep stumbling over my words. But what I meant to say is that high level of, and I forgot what I meant to say, high levels of volume mean trouble, danger, right? Voids in the volume mean free sailing, right? So I would expect price action to travel freely through this void until we get to the high level. And where does that high level start at? Right at that 1618, 618, 786 AB equals CD zone. Mic drop. Whoa! Keyboard drop, maybe, because we're doing analysis. Mouse drop. So I'm not sure what type of editing I did, but I want to ensure that no mice were hurt during the recording of this video. Gold is next. We got two opportunities on gold. One is going to be a structure-based trade. This one is simple. Look, left, price came to structure. Price is at structure. RSI is massively oversold. What am I going to say? Wait for confirmation, right? Higher high, higher close. Double bottom would be good. These are all good opportunities to trade gold higher. Opportunity number two, if gold does not go higher here on the daily, we have a potential advanced pattern setting up, right? If I look at my low here as being my X leg, this first move, this swing low to swing high is going to be my X to A. I want to take my Fibonacci retracement tool and measure it out like that and see where my B leg comes to. It just, oh my gosh, it just missed. I take it back. It just missed the 50%. I thought I was, again, I eyeball these guys whenever I do these videos. I don't do the analysis beforehand. I thought we hit a 50% retracement and we do not. So I take that back. So that's not going to be an advanced pattern formation here. This is why we double check everything. But I do have something interesting to look at here on gold, going back to the four hour that caught my attention. We've spoken a lot about head and shoulders today and the traditional version of them. This could possibly be an inverted head and shoulders, which looks a little bit different. So what would happen is we would start with a move down. I'm trying to figure out how to draw this on with the thing. And then this would be our left shoulder. This would be our left neck. This would be our head. This would be our right neck. Then the right shoulder would be somewhere symmetrical around this area. And then we'd look for a violation to the downside and a continuation lower. So again, in your traditional head and shoulders, you're looking for a reversal in the trend, right? So price action comes down, it does a little dance like that, and then price reverses. In this inverted head and shoulder, you're looking for a continuation in the trend. Price comes down, it does a thing, it goes here, it does that, and then it continues down like that. And that would be something that you're looking for here. Now I know what you're saying. Akil, you just said price is at previous structure. Perhaps I should look for longs at structure. But now you're saying that this could be this inverted head and shoulders, and that would be a reason to look for shorts. Come on, man. Which one is it? And my answer is it could be both. Now, I want you to think about this, and this is the beauty of trading. Whenever I talk about, hey, as traders, we're mercenaries, meaning that we can trade both sides of the market. And if we learn to be a chartist first and not just a strategy follower, we can analyze the market from different perspectives. I call it thinking like the other trader. And we can find either hidden opportunities on the side of the market that we want to be involved in, or we can find multiple opportunities on both sides of the market. So let me ask you this question. We are about halfway done this potential inverted head and shoulders. We have the left shoulder over here, ding. We have the head right here, ding. We've retraced back to the right neck, ding. What is the next thing we would need if we were going to carry on completing our potential inverted head and shoulders, right? Take a second, write it in, pause the tape, go over it in your brain. We would need a right shoulder, right? We would need a right shoulder. And what did I tell you about right shoulders, right? Usually they form at a symmetrical level. So if this is our left shoulder over here, right, these highs, then our right shoulder should probably come somewhere in here. This would make sense as we have previous structure in the middle as well. Well, let me ask you this question. For those who are looking for longs down here, where is one place that you would probably look to take some profit off the table? Now, I'm not talking a long-term gold investor. It's a whole different thing. But as a trader, well, probably somewhere in this level because this is where structure is at, right? So you can see that you can still be right in your long well before you get a signal for the short, because the signal for the short wouldn't come until you violate this level, which would invalidate the long to begin with. So you don't have to scare yourself out of trades, right? Both can be true, and you can use this skill of reading a price chart to either unscare yourself out of opportunities or put yourself in multiple opportunities. You're welcome. Next up, we're going to silver. Silver has been in consolidation. You can see price action dove down from the highs earlier to start this year. And then we've pretty much kind of just like dripped and trickled and bounced back and forth in between these levels. Now, if you know something about consolidation, you know that consolidation tends to form advanced pattern formations. And that's exactly what we have forming here. If price action were to dive down just a little bit, we would have a completed bullish Cypher pattern looking like this right here. Swing low to swing high, X to A, retracement A to B, extension B to C, and a move down to our 786 being our CD completion with that CD completion zone going from our 886 to our X leg right here. So this is a potential buying opportunity on silver as we continue in our consolidative ways. Speaking of consolidation and speaking of Cypher patterns, oil. We just came off a Cypher pattern on oil a few weeks ago, an X to A to B, B to C, C to D, a beauty of a pattern right there. And it looks like we're potentially forming another one. Not another Cypher pattern, but another advanced pattern formation right after it. Once again, if I take my Fibonacci retracement from my swing low to my swing high, you're going to see that we hit and passed our 618. I think our B leg did. Yep, our B leg did as well. So I'll measure this all out in a second for you. Let me just get the rest of my fibs on here. So what we're looking at is a potential bullish Gartley pattern. So the C to D leg of our Cypher is going to be our new X to A leg. This first retracement here is going to be our A to B. This second failed extension right here is going to be our B to C. And if price were to dive down to this 127 extension at our 886, that would be the D completion for our bullish Gartley pattern, looking for a buy here on oil. Next up is going to be the FTSE. I believe we looked at this in last week's video as well, where I said, hey, we have come down to a previous level of structure. We have hit it once, we have hit it twice, we have hit it thrice, and man, this opportunity looks nice. Sorry, I said I'd stop rhyming after last week's video, but I can't help myself. It's so easy. And we're looking for a run across this range to one of two levels, either all the way across the range here, or at least to our first inside level of structure right here. And that's exactly what we did. Price has now come back down to retest the lows, and just like the pound yen, well, although I do believe that the more times a previous level of structure is hit, the weaker that level of structure is, we also have shown zero signs of violating this level. So if you are a trader who's looking to trade just another quick little bounce, if you can find a buying opportunity down here, it's another opportunity to kind of trade it right back up to retest these highs. And again, knowing where you're wrong at right below this level, it gives you a pretty decent idea of what your risk profile looks like. And it's going to look something like this. You'll probably get involved maybe here. Your stop should be below there. And if you're looking for a move up to here, again, it's a 2-to-1 risk reward, which is pretty stinking good. So it's not a great technical trading opportunity in my opinion, but it is one where the market has put in a repeated trend. This is not going to last forever. At some point, it will either break to the downside or the upside here. But it is a chance to take another shot at this. You can also look at this as like a 2618 trade as well, where price action came down, we bounced here, we came back up, and then we bounced down, and you're looking for another opportunity to trade it up there. Although that might have happened already technically. Nope, I guess not. So that's it for this week, guys. Make sure you check out the channel in case you missed any videos. I put out a lot last week, and they are all gems. I can promise you that. And hey, if you like what we're doing here, do me a favor, support what I'm doing by hitting that like button and also by subscribing. I'm trying to get to 60,000 subscribers. And, well, if you're watching it and not subscribed, you should subscribe or else I'll feel bad. Yeah. Anyway, be on the lookout for another video coming soon, maybe a little week preview from the fundamental side like I did last week. And until next time, plan your trade, trade your plan. Take care.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.